So good day everyone. So I am Miriam Vasquez and I will be reporting the parts of role of non-executive director, also known as NXD. So an executive director is a member of a company board who not involved in the daily management of the company. So these are the parts of role of non-executive directors, which is the first one is establishing networks. Also mean one important role of non-executive director is to represent the company outside the organization. They use their experience, reputation, and personal contracts to build relationship with other businesses, investor, regulations, and industry leaders. These connections can help the company like form partnership, find investor, enter new marketers, or improve its reputations, gain strategic advice. So that are the connection that can help the company. So the second one is monitoring performance. So this means that non-executive directors must monitor and evaluate the performance of executive management, such as CEO and senior managers. So they check the is the company following a strategy, management achieving the agreed goals, or are the financial target being met, is the company being managed responsibly. So that was the they check always. So let's move on to audit. So audit means the entire board, including non-executive directors, must ensure the company provides accurate and honest financial report to shareholders. This includes our true financial statement, proper internal control system, transparent reporting of profits and loss, ensuring not feud or mismanagement. That's also let's move on to the role of chef financial officer, which also means CFO. I called CFO. So the CFO financial officer is a senior executive responsible for managing the company finance. Unlike the non-executive director, the CFO is involved in a daily financial operations. Main Also, the one of the main responsibility of the CFO is managing financial risk.
Hi everyone, I am Maris Elaine C. Gutierrez, and I will report about Objective Referee. Objective Referee, or Chief Financial Officer, need mahimong objective referee, meaning impartial or walay gipili. Kung mo-advise siya sa CEO or sa Board of Directors about accounting matters, dapat fair and transparent ang iyang explanation, dili para paboran ng isa ka tawo. It is important kaayo ang transparency kay dili ganahan ang board nga ang financial figures gipataas lang para lang maayo tan-awon but dili tinuod. So ang CFO dapat mahimong trusted advisor sa financial reporting para maka-decide og sakto ang leaders sa company. Like for example, kung ang CEO gusto niya ipakita nga taas ang ilang profit even na pa sila expenses nga wala na record, ang CFO dapat maingon nga dili pwede kay dili pa accurate. Mas importante ang honesty kaysa good image. Next is roles of the Audit Committee. The Audit Committee is important sa part sa corporate governance system. Ilang trabaho is to ensure nga ang company sakto ang process of financial reporting. Ang importante nga principles ani kay kinahanglan independent ang mga members, meaning dili sila part sa daily operations or senior management. Pero bisan independent sila, need hapon nila na communication between management and audit committee para klaro ang information. For example, kung ang company na sila expansion plan, ang audit committee need makabalo sa risk ani, like kung ready ba ang financial state system or internal control sa growth. Next is understanding the audit committee's responsibilities. Ang main responsibility sa audit committee kay oversight function. Sila ang nagbantay sa financial report process o sa quality reports para mabuhat na nila kay need nila sabton nila ang goal sa company, long-term plans or kanang challenges sa gi-face sa organization. Apil sad ang pag-identify sa risk o pagtanaw kung sakto ba ang internal control system sa pag-manage ana nga risk. Next is risk identification and response. It is important to understand sa kanang audit committee ang risk nga gi-face sa company. Naay pressure sometimes nga patason ang earnings para ma-impress ang investors. Nasad siya risk related sa internal controls o company growth. kung dili maayo ang control, mahimong ma-affect ang performance sa company. Let's move to roles of external auditor. Ang external auditor, usa siya ka independent professional nga mo evaluate sa financial statements sa company. Ang audit process systematic ug object meaning ana kay based sa evidence ug standards. Ang goal kay masigurado gani nga ang information sakto ug reliable siya para sa shareholders ug other users. Like for example, kung ang company nag-report og profit nga dako kayo, ang external auditor ana mo check sa records kung tinuod ba gyud ang figures or nabay mali. Next is need for external auditor. There is a need for independent ownership and management oversight. Organization to cast away and ensure are always generating better information are becoming more useful. Na siya two factors that contribute. First is remoteness of information. Meaning, layo ang owner sa daily operation. Second is bias of information. Possible nga ang management magpakita og favorable data. Let's move to internal risk. Internal risk, ang rapid technology changes isa ka external risk nga kanang delikado sa company pero dako kayog effect sa ilang business. Pasabot ana kay mas paspas kaayo ang improvement sa technology o kung dili maka-adapt ang company, possible sila like mabiyaan gani sa mga competitors. Sa current generation, need nila i-embrace ang mga bag-ong technology aron maka-survive then maka-continue ra sila sa lang business. Panalitan kung ang isa ka company nag-focus lang sa physical store but wala nag-expand sa online selling. Like sa Amazon, possible sila mawad-an og customer kay mas convenient ang online shopping. Mao nga ang audit committee dapat alert og tan-awon kung updated ba ang company sa technology advancement aron dili sila mapildi sa competitors.
Good evening everyone, this is Mary Rose Garbo and this is the third types of risk that affect organizations, particularly from the perspective of corporate governance and audit committees. So this is the information and control risk. Information and control risk relate to weak internal systems and poor communication. This happens when there is weak supervision, management overrides internal controls, and information is not communicated on time. For example, if management ignores established financial controls and approves payments without proper documentation, this increases the risk of fraud. And dani siya real-world example nga nahitabo dito sa US. And ang name sa company nga na-bankrupt is Enron Corporation. Ang nahitabo ani is ilang company manipulated financial statements due to weak internal controls and management override. And moto, as a result, it collapsed and caused massive losses to investors. And for the last part of our topic, I will discuss additional factors that contribute to information risk, the meaning and objective of auditing, and the duties of an external auditor. First is the volume of data. As business grow, they process thousands or even millions of transactions daily using computer systems and manual processes. So nganong importante man niya ang volume of data? Because modern businesses process a very large number of transactions every day. And kung magkadako ang company, they may handle thousands or even millions of sales, purchases, payments, and other financial activities. And kung ang volume of data mo increase sa diyang risk of errors, and it becomes harder to detect mistakes manually. Yang uban sa ng financial statement kay it may become inaccurate kung dili ma-review og tarong. Mao na nga ang auditors and accountants must use proper systems, internal controls, and audit procedures to examine large amounts of data carefully. Next is the complexities in transactions. Modern business transactions are becoming more complex. Examples include derivatives, futures, multi-level mortgages, and financial market transactions. And dili ni sila dali i-record og sabton. And tungod ani nga mga complexities, mo na ang company manginahanglan og auditor para maka-analyze ug maka-interpret sa ilahang mga transactions. Now, let's move to meaning and objecting of auditing. The main objective of auditing is to express an opinion on whether the financial statements present are true and fair view of the company's financial position. Auditors follow established standards to ensure that their opinion is reliable and independent. Auditors' duty includes examine financial statements, form an independent opinion, state whether the accounts comply with accounting standards, report whether the statements present are true and fair view, report any reservations or concerns. And in most countries, auditors have a legal responsibility to report whether financial statements are prepared according to standards and whether they present a true and fair view. Their opinion adds credibility to the company's financial reports. For example, let's say naay usa ka large retail company nga nagprocess og 50,000 sales transactions taga-adlaw og tungod sa kanang system error, ang ubang sales kay ma-record og kaduha and ang uban dili sad ma-record. Maong management may not immediately notice these errors because of the large volume of data. Ang buhaton sa auditor ani i-review nila ang company system ug i-perform ang testing procedure. Ug after examination, the auditor discovers discrepancy in revenue reporting. The auditor then reports these findings and gives an opinion on whether ang financial statement kay na patas ba og present. Ug mo ni siya ang usa ka example kung ano importante ang auditing para ma-detect ang mga error ug maprotektahan ang mga stakeholders, pareha ng mga investors, creditors, and management. And sa ako ang nasabtan, as a businesses grow and transactions become more complex, so auditing becomes more kanang essential. Kay ang auditor makatabang man na siya para ma-ensure ang accuracy, transparency, o ang trust sa financial reporting. Kung walay auditing, stakeholders or mga trabahante may not have confidence in financial information. So that's all. Thank you.